U.S. President Donald Trump has halted the latest round of high tariffs on some of America's trading partners. The duties on goods imported from 60 countries he described as the worst abusers went into effect on April 9. But Trump later said higher tariffs on some countries would be paused for 90 days, with an overall 10% tariff to remain in place in the meantime. At the same time, he raised tariffs on Chinese goods to 125%. Trump said the tariffs would boost U.S. manufacturing and protect jobs, but economists warn the move could hurt the global economy and raise prices for consumers in the U.S. and around the world. What are tariffs and how do they work? A tariff is a tax imposed on goods bought from another country. Usually, the tariff is a percentage of the value of a product. For example, a 25% tariff on a $10, £7.59, product would cost an extra $2.50, £1.90. A 125% tariff on Chinese goods would cost an extra $12.50 in taxes, bringing the total cost to $22.50. Companies bringing foreign goods into the country have to pay taxes to the government. The money is collected when imported goods pass through U.S. customs. Companies can choose to pass on some or all of the increased costs to customers. Why does Trump use tariffs? Trump has argued for decades that the U.S. should use tariffs to boost its economy. He says it would encourage U.S. consumers to buy more American-made goods, increase the amount of tax collected and encourage greater investment in the country. Trump wants to narrow the gap between the value of goods the U.S. buys from other countries and the value of goods it sells to them. He argues that America has been taken advantage of by fraudsters and looted by foreigners. The U.S. president has also made other demands besides tariffs. The first wave announced during his current term targeted China, Mexico, and Canada, after he said he wanted them to do more to stop migrants and drugs from entering the U.S. Trump has vigorously defended his tariff policy, but a growing number of influential figures in the Republican Party have joined opposition Democrats and foreign leaders in attacking the move. What are Trump's reciprocal tariffs? Trump imposed a minimum tariff of 10% on all imports into the U.S. on April 5. The UK, Argentina, Australia, Brazil, and Saudi Arabia are among the countries whose goods are subject to this floor charge. Much higher tariffs were initially imposed on 60 other countries on April 9. These included 49% on Cambodian goods, 46% on Vietnamese imports and 20% on goods from the EU. Chinese imports were initially due to face a 54% tariff, 34% on top of the 20% rate already in place. Trump later raised the total to 104% after China vowed to fight to the end and refused to drop its own 34% retaliatory tariffs on the U.S. Hours after the 104% tariffs came into effect, China announced it would impose a much higher 84% tax on all U.S. imports from April 10. Trump quickly hit back, saying the U.S. would raise tariffs on Chinese goods to 125% with immediate effect. For now, Chinese manufacturers and American consumers are still benefiting from a tariff exemption for small parcels shipped from China worth less than $800, £624. But that exemption is also due to end on May 2. These goods will be subject to a 90% tariff rate, or $75 per item, rising to $150 per item after June 1. White House officials have described the higher tariffs as reciprocal. Reciprocity means the tariffs are based on the sum of what countries cost the U.S. in existing tariffs, plus the costs of meeting non-tariff barriers such as regulations. However, the White House uses a different calculation, setting each tariff rate at a level that would eliminate the U.S.'s trade deficit in goods with each country. And some countries, including the UK, have been hit with tariffs even though they buy more from the U.S. than they sell to the U.S. The White House has confirmed that certain goods are exempt, including copper, pharmaceuticals, semiconductors, energy, and certain other materials that are not available in the United States. Trump has said he plans to remove the exemption for pharmaceuticals to help shift drug production to America, but it is unclear if or when this will happen. Trump has previously announced 25% tariffs on goods from Mexico and Canada, and 10% tariffs on Canadian energy imports before introducing a number of exemptions and delays. He has also imposed 25% tariffs on all steel and aluminium imports, as well as foreign-made cars. The 25% tariffs on car parts are due to come into effect no later than May 3. Trump's escalation with China has now raised questions over U.S. trade with the European Union. The EU has also agreed to retaliatory tariffs against the U.S., which will come into effect on April 15. Will prices rise for U.S. consumers? Many economists expect tariffs to raise the price of a range of imported goods, as companies pass on some or all of their increased costs. Products affected could include everything from clothing, coffee, and alcohol to electronics. Some companies may also decide to import fewer foreign goods, which could make those that are available more expensive. The price of goods manufactured in the U.S. that use imported components could also rise. For example, car parts typically cross the U.S., Mexico, and Canada borders several times before the vehicle is fully assembled. Car prices were already expected to rise as a result of previous tariffs. The cost of a car made using parts from Mexico and Canada alone could rise by $4,000 to $10,000, $3,035 to £7,588, depending on the type of vehicle, according to analysts at Anderson Economic Group. The move could also hurt the U.S. economy. The chances of a recession rose to 50% after Trump announced the new tariffs, according to former International Monetary Fund chief economist Ken Rogoff. Top Trump officials have repeatedly played down fears of a recession, insisting that the tariffs will go ahead as planned. What happened to the stock market? Trump's tariff announcement caused significant volatility in global stock markets. The stock market is where companies sell shares in their businesses. It reflects the best estimate of what each company in the world is worth and what their future profits will be. Stock prices took a hit because investors thought the new tariffs would raise costs and reduce profits. Many people were affected by the stock market crash, even those who didn't invest directly in stocks, because of the ripple effects on pension funds, jobs, and interest rates. But after Trump announced the 90-day pause, U.S. markets rebounded sharply.